And we're broadcasting. All right. Good afternoon, everybody. Welcome to the Omni webinar series. Let me go ahead. We're waiting for a few more to come in. Again, welcome to the Omni Practice Group Dental Webinar Series. We're waiting for a couple more to come in. We'll give them about a minute more, and then we'll start the presentation. So thank you for joining us tonight.
Good to see you, Kelly.
All right. Well, thank you everybody for joining this evening. We appreciate you taking time out of your busy schedules to join us here on the Omni Practice Group Dental Webinar Series. Tonight, our webinar will be what impact will COVID-19 have on my practice valuation? Omni Practice Group is proud to announce our leadership webinar series. We are hosting industry leaders in the dental field to present their expertise and opinions on how to best help dental practices navigate through these uncharted times. Our Omni webinar series will continue to take place over the coming months and will include topics that are relevant to dentists across the country. I'm Kevin Brady. I'll be your host tonight. I'm a practice transition broker with Omni Practice Group. Been in the dental world for over 30 years here in Colorado. A little bit about Omni. Omni has been serving dental professionals for over 15 years. Our team of professionals consists of 3 dentists that are on our staff. We got 2 full-time CPAs, 3 certified CVAs, and 4 marketing staff. So you get a team of professionals that are working with you on any type of plan to transition or to look at acquisitions. Our whole team works with you to make sure that you're getting the best possible outcomes that you can. Omni's Practice Group is the leading provider of practice transition, sales, valuations, consulting, and real estate services. We're here to help with any planning questions you have concerning practice transitions, either now or in the future. Feel free to contact us at either kevin@omni-pg.com. Phone number is 303-910-3214, or feel free to visit our website at omni-pg.com. A little bit about tonight's webinar. The question and answer session, a little housekeeping, is during our panelists' presentations, you may come up with questions. Feel free to use the chat or the question and answer section. I can say that big word. We will not use the chat function tonight, but if you want to send a question, we'll be going through those at the end of the presentation and reviewing all the questions that we can get to and answer from the Q&A. If there's a specific host that you would like to address it to, feel free to put their name in front of your question. Our agenda tonight is we've got a number of different speakers that will be going through their presentations with you. They're industry experts. Then we'll have a Q&A at the end, and time permitting, we'll try to get through as many questions as we can. The ones we don't, we'll follow up and get the answers to everybody. We do have a full load of great speakers tonight. You've got Rod Johnston, you've got Kelly Jackson, Torben Welsh, Matthew Sullivan, and Michael Denzio with us tonight. They're great speakers, and you'll enjoy their presentations as we get through the night. So look forward to introducing Rod Johnson. Rod is the president of Omni Practice Group. Rod's background is in accounting, finance, sales, real estate. Makes him one of the most well-rounded practice transition consultants in America. Rod has an MBA from Seattle University and is a certified management accountant. He is also an accredited business appraiser by the Institute of Business Appraisers. Rod, welcome, and thank you for hosting and letting Omni host this webinar series. Thanks for being here tonight.
Oh, thanks, Kevin. You forgot COVID survivor too in there, so I forgot to put that.
Ooh. Yeah, Rod's already had the COVID up in Washington and survived.
That's right. Okay, are we gonna go to the PowerPoint?
Can you see the PowerPoint?
I cannot see the PowerPoint.
Tell me you can.
Not yet.
All right, let me go out. All right.
A new way of life.
All right, can you see it now?
Webinar.
Oh, you can't see it. I know why you can't see it.
It's worked great in the dress rehearsal, right?
Yeah. I know why you can't see it. Oh. Let's end this show and let's go to, and I need to look at share screen, and we're going to go ahead and we are off to the races.
Nope. Not quite there yet.
Got it yet?
Nope. Still not there.
Oh.
There it is.
There we go.
There we go.
We're in business.
All right.
Okay.
There we go.
All right, we are in business. So, all right, thanks, Kevin. Sorry, everybody, for the technical difficulties. So I'm going to talk a little about the reopening and COVID, and then talk about valuations and what the current market's doing as far as some transitions. As Kevin mentioned, with Omni Practice Group, and we do transitions throughout the West Coast. Been doing about 15 years, so been through ups and downs in the market, and this is just another one of those. So this map here, and I think the first 4 or 5 slides are courtesy of the American Dental Association, shows the states that are currently open for dentistry, and as you can see, the majority of them are. I think the pink, I think that's what the color is, ones are still doing just emergency only. And then the light green ones are just still doing some minor, they're finally opening up as well. So next slide, Kevin. So the current status of dental practices, approximately about 20% of dental practices are open and business as usual, which means that they're already at their pre-COVID numbers. So their collections, their productions, most of what the patients are seeing are what they were before COVID. The 70% are open, but at a lower patient volume than usual. And that's the bulk of the practices. And we're in constant contact with 30 or 40 practices over the last few weeks. And I would think that's a lot of them are at that point because they have to do more sterilization between patients. They have to take temperatures and those types of things. Just the turnover is taking them a lot longer to get through. So that's why that number is a little bit lower. There's about 7% are closed, but they're seeing emergency patients, and there's a small portion that are closed and not seeing any patients. And we have a number of practices right now who the doctors just don't want to go back into the practice. A couple of them have had cancer in the past. I got a doctor who has diabetes. She's just so afraid of COVID that she doesn't want to go back into the practice. And so there's some health reasons they really don't want to go back into practice, and they're asking us to sell their practices as they are. And with those type of practices, we remind them that the value really goes down. It's as if you passed away and you're no longer in the practice is closed. So the value is just going to keep going down for those types of practices. Next slide. Some of the challenges we're hearing from doctors in their practices include not having enough PPE in the practices. You know, the N95 or K95 masks, the surgical masks, the face shields and the gowns. They're still a bit hard to get. You know, you should have a pretty good stock of those in your practice at this point or going forward. You can see that there's only 8% of the practices have 0 days worth of inventory, and then 18% of masks, 18% have 1 to 7 days, 30% are 8 to 14 days, and 41% are more than 14 days. So it's critical that you get your masks and other PPE stocked up so that you have a good supply of those things in your practice. How full is your practice's appointment schedule? What we quickly found out is that patients are not having too difficult of a time coming back for the most part. You can see about 31% of practices are from 75 to 99% of their full capacity. 51 to 75, 31% are about 51 to 75%, about 15% are 25 to 50% full, and less than 12% are less than 25% full. So what this more or less tells us is patients are eager to get back and get their dentistry done. They know that you know, really a dental office is probably one of the more safe places to be. Even before COVID, I know dentists are pretty careful with their sterilization routines, and even with post-COVID, they're even more careful now. So I think doctors have done a good job at communicating that with their, I've seen Facebook posts from practices and Instagram posts saying, this is what we do when we bring you into the office. We take your temperature. There's only a certain amount of patients allowed in the waiting room before you go in, or you wait in the car, and those types of things. So I think that's allowing patients to come in quick. Staffing remains another big challenge. We hear a lot of doctors say that their assistants are not wanting to come back because they're getting that $600 spiff every week, and that plus their unemployment is greater than what their normal rate of pay is. So they're having challenges bringing some of the staff back, especially the dental assistants, the lower paid staff. We've heard other stories of hygienists and maybe office managers not wanting to come back. They got a taste of being at home with their kids, and their husband has a job or their wife has a job, and they've just decided that, you know what, I think I want to continue staying home. So don't we all? But they don't realize is unemployment runs out, and so does that $600 a week at the end of July. So they'll have a hard time making it after that. Practice values, which is a big question for a lot of people. We've been getting a lot of calls, and I've been doing a lot of valuations. They're wondering what the practice values are these days. A lot of some well-known consultants, advisors, CPAs out there have been suggesting to buyers that they should possibly look at getting some type of discount from the sellers because of COVID. They've been shut down for 2 or 3 months. So there really shouldn't be a practice selling at full price. Our argument, we argue against that. We say that, well, it's just like a big snowstorm came in for 2 months and shut the practice down. Those patients, 20% of the patients in the practice did not leave the practice. They're going to be coming back, and the statistics show that. So the way we're valuing practices right now is we're looking at 2019 as kind of the base year, doing the practice valuations through 2019 at the moment. As time goes on, we'll look at expanding that in 2020 and just averaging out the COVID months. Let's see, can you go back that previous slide for a quick second, Kevin? There's a couple of other things in there. So good practices and good locations, you're still going to get a really good value for those. You know, if it's a practice in downtown Denver on a corner doing 1.5 million with 50% overhead, you're going to get a premium no matter what. So that's one of the points I wanted to make. So if it's a good practice, it'll still sell. The patients in production are coming back. The practices that might have trouble selling are the ones that would have trouble selling to begin with, and those are those practices doing under $300,000 or $400,000 a year. Thanks, Kevin. Next slide. And then practice sales. We've heard of some associates getting let go because the doctors, the owner doctors, believe that their production is going to be down, so they decided that they want to just take on that production themselves, so they've let their associates go. Those associates are now turning into buyers because they want to control their own destiny, so they've decided they want to buy a practice, and we've had a couple of instances of those recently. Sellers are being influenced by COVID and PPE requirements. Some of the sellers we talked about who don't want to come back into practice just don't want to deal with having the additional requirements of the PPE and the face shields and the stuff up front and taking temperatures and all that stuff. DSOs were pretty aggressive pre-COVID. We've kind of seen a slowdown to some degree with some of them. The private equity guys are a little bit nervous of what's going on, so they're kind of taking a wait and see attitude on moving forward purchasing practices. Just this past week, we're starting to get some more calls, but they're a lot slower than they were before. It is still a seller's market. In all the markets that we're in, there's more buyers out there than sellers. Buyers are heating up. They're looking at practices. We're out there showing. In fact, I was showing practices today. So they're coming off the bench and looking at practices. You know, if you are thinking about delaying your sell, which we do have some doctors who said they want to wait and see how things go, be sure and plan and prepare for your transition. Give Kevin a call if you're in Colorado. If you're 1 to 3 years out, we've got some ideas to help you, and so does Mike. I know that he'll be talking about that as well. So plan ahead, get your practice going, get your numbers where they should be. We always say keep your foot on the gas. We get some doctors who get close to their retirement age and then they start to put the gear in neutral and then they coast. So be sure not to do that. So, practice financing. It's gone from a lot of banks lending right now to a few banks lending. I won't say too much about this, except profitability and cash flow are the most important things in a practice. So if you're going to pay attention to anything, pay attention to those two things. I know Kelly's going to talk about the practice financing end, so I'll leave it at that. So. And bottom line, from the statistics, you've seen that patients are coming back. They all still have teeth, so they all still want to have their teeth cleaned and their problems fixed. So that's a good sign. I think a lot of people are relieved to see the numbers come back so quick. Collections are coming back. One practice we're working on their transition right now. They're actually collecting this first month higher than they were pre-COVID. So not only did patients come back, they came back with a vengeance. Practice values and sales are returning. They're coming back. So we haven't, we had some practices pre-COVID that were about ready to close that didn't close, and we now have since closed those practices. So that's a sign that things are turning around. Like I said, keep your foot on the gas pedal. We've all survived through the last few months, so life goes on, so keep on moving. And I believe that's it. So if you have any questions, you can give myself a call. Those of you in Colorado, you can call Kevin. So thanks for your time. Did I keep it under 20 minutes?
You did good. Thanks, Rod. Wow. Super job. All right, our next presenter is Michael Dinzio. Michael's the founder of Next Level Consulting. Michael's an experienced and highly respected dental practice consultant who has helped over 500 doctors start and buy and grow their practices for almost a decade. With Next Level Consultants, he hopes to expand his efforts so he can motivate and enable even more doctors to thrive and meet their goals. Michael, thanks for taking time tonight with us, and we appreciate you being here.
Yeah, my pleasure. Thanks, Kevin and Rod, for having me. All of us panelists love what we do, and we're here for the folks in the audience. I know there's a lot of different emotions with this whole COVID situation, and I can speak for everybody in that we're here for you, and anything that we can do, just please directly reach out. I usually I'm on the other side, representing buyers with Next Level, but it's super important in general to surround yourself with a great team. And whether you're 5 years, 2 years, 1 year out, it matters. Oh, there's a train, if you guys can hear it. So, sometimes that train gets a little aggressive, but bottom line, this is such a weird time for everybody. Lean on your advisors, all of us on the call today, and who you're currently working with. We've seen a lot, and we're here to kind of help you transition and put goals together. So I couldn't stress this enough. A good broker, a good consultant, attorneys, financial advisors, accountants, we're all here to kind of help you reach your goals. I wanted to touch on this, the mentality of the buyers today. I represent about 25 buyers currently, and they're actively looking for practices today. They are optimistic, but optimistic is the right word there. The younger generation, they know what they're up against. They know the insurance companies are cutting fees. They know that employees are difficult. They know that the DSOs are taking over the universe, but they're still ready to do it, which is super cool. At the end of the day, dentistry is a phenomenal business still. The profits are still good, and the default rates are low. I'm sure Kelly will discuss that. But as they approach these deals, they do want some guarantees that things are going to be okay, but they're still willing to take the risk. So if you were thinking, why would someone want to buy a practice? They do. They're going to want a soft landing, knowing that there's a lot of variables out there right now with COVID. But you and the broker, Omni Group, your team, just putting a solid transition plan together for that buyer, they're going to feel good about it. They may want a bargain, like Rod said, pairing up with CPAs that think they might beat you up on the value. But what I'm seeing with my clients, we do a lot of practice consulting, active management. The schedules are full. So the statistics that Rod were sharing with you today in the slides are 100% what I'm experiencing with my clients. The schedules are full, and if they're not full, they're because we've decided to slow down a little bit. for, precautions, pre-screening questions, all that good stuff. So, as long as the buyer kind of sees that the business can rebound and they all have, in my experience, the buyers will be okay. They are concerned about a second shutdown, but there's a lot of opinions about that. And then the last piece is we're all relying on the banks. The banks are a big piece to this. If they can't put the money together, then we're all stuck here with open arms. But like Rod said, there are banks absolutely lending right now, and that's encouraging. Next slide, Kevin. So basically, getting ready for sale, as a practice consultant, I focus on this whenever I'm working with an older doc that's gearing up for a practice transition. They might be 5 years out. These are kind of some of the things that I really focus on, cleaning up your books, knowing your personal expenses, carving those out and calling those out to the broker or buyer is super important, because that buyer wants to know how much money they're going to make. Managing your expenses. This is super important because, as we ramp back up from COVID, just because our top line, it might be lower this year, that doesn't mean that our profitability isn't there. It's just how we ramp up. So if you're that doctor that, that onboarded your entire team and, but your revenues are down, you're going to have some issues there. So just be mindful about how you're managing those expenses. Set production goals, get back to your average as soon as possible. Manage those cancellations tight. We're going to talk a little bit more about that. Just fill the schedules as far out as you can, because those buyers are absolutely looking at your schedule when they're doing those chart audits and practice views, so to speak. So secure those team members, the key team members specifically. I noticed that during transitions, the goodwill is absolutely with the doctor, but being a buyer rep, I see the buyers where they want to buy, we go through negotiations, we get to the close, and then I'm with them post sale. And those key front office people, those key hygienists are so important to the transition. You'd be surprised how much goodwill is with them. And so it's really important that, you keep them at pretty much all costs if you can, because that's going to really ensure that the buyers have a great transition plan. HIPAA compliant is a big thing. Rod and I, we've gone back and forth on this. When we walk into an office that isn't HIPAA compliant and their servers are outdated and the computers aren't working, and we know that there's some, just like OSHA and all the other COVID regulations, you got the HIPAA regulations coming at you too. And that's something that the buyers are really, really mindful of. And so if you haven't, consider upgrading your computers and getting them HIPAA compliant, because that's what the buyers are going to have to deal with. And then the last two, of course, clean accounts receivables. I like practices to be somewhere around 10%, 1 month or 10% of collections to be in accounts receivable. If you have more than that, the buyers are going to potentially negotiate with you or just not want to buy them at all. So the cleaner your accounts receivables are, the easier it will be to sell those. And then the last thing is clear up the credits. That's always a fun process, getting right to the finish line. If there's a lot of membership plans as well, those can be considered credits if you all jumped on that membership train, which I love. But those are definitely something that the buyers are looking at. So just in general, as a theme, keep everything clean. Just get really organized, because everything that you do is gonna be looked at if it's a sophisticated buyer and they're working with a team of professionals like the panel today. Just getting back to things that you can control versus not control. Go ahead and go through all those, Kevin. There's so much out of control like COVID. I've been coaching a lot of my practices to just try to control what you can. The things that you can't control, of course, are the insurance contracts and fees that they're fluctuating year over year. Wage expectations are out of control. you got to try to manage those the best you can. You know, rent is what it is, so you can't really control that now. It's already negotiated. You got COVID and OSHA and just regulations coming down on you. So you could sit there and focus on all of that stuff that you can't control, or you could focus on the things that you can control. And that's kind of what the big things that I really want to highlight is, you know, you can control patient experience. You can control the culture in your office. You can control, you know, new patient marketing programs where you're asking for referrals and reviews. You can control follow-ups. I mean, probably the easiest way to grow a practice in a short period of time is just tracking follow-ups, recare programs, and just getting people back in the office and being diligent about that. You absolutely can control case presentation. You know, I would say you should start tracking, you know, what you're actually presenting. I find that a lot of doctors, just like Rod said, take their foot off the pedal and they stop diagnosing. And I can understand that you're tired. You don't want to deal with it. But if you do that, it's going to directly affect the value of the practice. And so just keep on keeping on. And if you're too tired, maybe now's the time to consider selling. Let's get to the next one. And my 2-year-old's video bombing me right now. Let me shut the door real quick. So, hold on 1 second. All right, I'm back. I think you jinxed us with the technology, Kevin, in the beginning. Now this whole thing. Go ahead and go to the next slide, please.
All right.
The fun things about working at home these days, right?
Oh, yeah.
So I guess these are some challenging questions that I would give you if you don't know these things. If these things aren't on the top of your mind, if you're not tracking them, you know, this is just getting back to the basics. Every business owner needs to get back to the basics if they're reviewing their business. And, you know, I'm going to ask you some of these questions. I really do want you to write them down. And if you don't know them, go investigate, because this really is the stuff that you can control. So do you know what your actual perio percentage is in your office? Should be 30%. If you don't know that or more, if you don't know that, why? You know, are you diagnosing all of the SRPs? Are you doing all of the preventative things that we need to do? So go find that out if you don't. What is your actual case acceptance this month? And what I say is case acceptance is, it could be twofold. If you present a case and someone schedules, that's a percentage that you should track. But even better, what are the dollar amounts that you presented, and what are the dollar amounts accepted? I always ask my clients, like, what do you think your case acceptance is? And they always think it's way higher than it is. And it's because they see the patient scheduling up front, but guess what? They only accepted one of your fillings when you maybe diagnosed 4 fillings. So you should probably track both of those. What is your oldest claim outstanding in accounts receivables? Super important to know that. This is a judge, or not a judge, but something that your front office needs to be held accountable towards. Every time I go into a practice, I look at this, because if there's receivables out past 60, 90 days, that's a problem. That's your money and you need to go get it. And so that's something that you want to know. How many days is your oldest claim? When was the last time you increased your UCRs? This is shocking. I'll provide this to the audience today. I'll get you a free, I have a directory to the National Fee Service Survey. Shoot me an email. I'll send you what fees you should be charging in your area. If you haven't increased your fees, you need to. Of course, this applies to your cash paying patients, but still, most offices are 25, 30% cash paying. And if you just lifted your perio maintenance a couple dollars or your fluoride a couple dollars, it really does mean some serious dollars at the end of the year. Specifically, how many patients this week or month went inactive? You know, we always focus on new patients coming into the office. What about the patients that went inactive this month? And what I consider inactive is any patient that hasn't been in your office in the last 18 months. I always look at how many new patients come in versus how many patients went missing or went inactive, and then what your net gain is. It's always interesting to me. I see average new patient 25 a month, month over month over month, but yet I sometimes see collections falling. And you're just wondering, well, why is that? Well, it's because the recare program's falling apart. So something you want to definitely track. How much does your team cost you? Percentage within 3%. Do you know that? Do you have specific goals daily that your team, keyword, that your team is motivated to hit? And are you discussing that goal in your morning huddles? How many of you are even having morning huddles? And by the way, morning huddles aren't just to talk about what's on the schedule. Everybody can read the schedule. But what about looking at the schedule and saying, oh, Susie, does everybody know Susie's birthday today? Let's, as a team, everybody say, hey, Susie, nice, have a great birthday. Or how about calling out the clients that might need third-party financing? Just having a strategic conversation around the day, discussing what worked and what didn't work last week, or I'm sorry, the last day that you worked. But that's what team meetings are all about. Not all getting in a circle of kumbaya and just reading the schedule for the day. So getting back to the basics. When was the last time you called a patient before their appointment? This is a goodie, oldie but goodie. This is you, the doctor. I'm talking to you. When was the last time you called a new patient and said, hey, we're really looking forward to meeting you. I'm the doctor. And what's your greatest fear about dentists, or why are you coming over? I mean, that's the kind of customer experience that you want to have, right? And then the last one is if you Googled dentist near me and you were sitting in your office right now, would you even pull up? Would you even be on the first page? If you're not, it's something we need to look at. So, it's amazing how just focusing on 3 things on this list might grow your practice, just the smallest amount. And so I would challenge you on all these questions. Take a picture of that. Call me if you want any strategies on, trackers or good ideas to implement some of this stuff. But I think that's what I have, Kevin, for tonight. And I'm looking forward to any questions that come through the chat or Q&A. But I like I said in the beginning of this, we're all here for you. Reach out to us directly. We want you to be successful. And thanks again for having me. How did I do, Kevin? 16 minutes? That's not bad.
Michael, wow. Very good. Thank you.
I just want everybody to know, 16 minutes.
Oh, super job. And again, I'll go back to it. If you do have questions of Michael, here's his information. Feel free to reach out to Michael. As he said before, he does a lot of answering questions that you may have on the side. Again, put them in chat tonight, and we'll also try to, or in question and answer, not chat, question and answer, and we'll try to get him to answer as many as we can, and the rest of the panel. So, Michael, thank you.
Yep, you're welcome.
All right, our next speaker is Matt Sullivan. Matt's a partner with Messner Reeves. Matt has extensive experience representing doctors, dentists, and other healthcare professionals with regards to corporate and real estate matters. Welcome, Matt. And also with Matt tonight is Torben Welsh. Torben is also a partner at Messner Reeves. He has built his legal expertise by aiding in the resolution of complex corporate, real estate, and intellectual property transactions in a variety of industries. So welcome to both Torben and Matt, and we'll let you guys take the floor for now. We appreciate you taking time. Hopefully we're not on billable hours at this point.
Only you, Kevin.
Ah, God, thank you.
Yeah, thank you for having us. Torben and I are happy to be here. I know that we're kind of looking at COVID-19 and how that's going to affect the practice valuation. But with the practice valuation, the biggest thing that we want to look at from an attorney perspective is when you go into an asset purchase agreement or anything along those lines, whether you're going to do a new startup, you want to be able to look at kind of the legal ramifications of what that means. What we're seeing, since this is kind of unprecedented times, is that we really need to start thinking outside the box of what attorneys have been doing in the past. No one really has had to deal with an epidemic such as this. So you need to be able to have a good team around you that will be able to think creatively to be able to get you to that point. For example, going into an asset purchase agreement, if you're starting to look for different practices and you're at that point where you have a term sheet and now you're starting to put the document together, you want to have some protections in there as a buyer. You want to make sure to have that lender contingency in there for financing. I know over the last couple of years, a lot of dentists have dropped that out of their agreements just because lending was a little bit easier to do. But over time, and obviously with the parameters that are set forth now, you want to make sure that you're going to be protected. If you can't get the lending or the lending isn't right for you, you want to be able to pull out and be able to get your earnest money back. So those are kind of some of the things that you've got to think about. Those are general ideas and ones that we've all heard of before. The other things that we're going to have to start looking at a little bit more closely are, what does good faith and ordinary course of business mean? As a buyer, that's what you're asking sellers to do, is continue your ordinary course of business. And obviously, if the government comes in and has another stay-at-home order or COVID ramps back up, these are things that we need to be able to address to say, well, hey, your practice is now closed. We're losing patients. The valuation does change at that point. With that said, though, and I think Michael and Rod both kind of touched on it, was, when you're looking at the valuation in these practices, you're going to be using some of the pre-COVID numbers, because the idea is that we will get back to those numbers. The ramp up might be a little bit slow, and I saw in one of the chat that we will see kind of, and what I've seen from a lot of my clients are that they're busier than they've been right now just because of the pent up demand. So going through it, all the practices have now opened, but they're ramping up. They're trying to see as many patients as possible, but that will, in my opinion, probably settle down a little bit too. So that's going to affect your valuation, but also something to think of as a buyer. And when you're thinking in the asset purchase agreement of how is that going to affect, your ordinary course of business? Are you taking the right precautions? Are you following all the COVID protocol? Do you have the right PPE, as we talked about before? The other items that we want to make sure that you're thinking about are, when you go in and you do the APA, what's your lease or your purchase agreement look like for the property that you're going to go and utilize? Those are things that you want to be able to negotiate with the landlords now, or with the sellers. Generally, if it is a seller of the property, it might be the dentist you're working with. But what kind of contingencies do you have in there? Also, in the lease, you want to be able to look at, what does your force majeure clause look like? If you are shut down because of a government regulation, then are you going to have to continue to pay rent if you're shut down? Generally and historically, what we've seen in at least the leasing is the answer is yes, you have to pay rent, but it's all subject to negotiation. Things are changing every day. So those are items that we need to be able to look at. You need to kind of think outside of the box. Not everything is ordinary or customary currently. You have to kind of think on your toes. You have to be able to think of the different legal aspects with it. So you can do that with a good consultant, a good attorney, and a good practice broker to be able to get you over those thoughts. So those are kind of just a very quick introduction. I know Torben's got kind of the other half of this. So I wanted to speak quickly and then be able to kind of turn it over to Torben to be able to also go through kind of what we're seeing from the dentist side and operations and PPP loans and how they're going to go about getting that and actually the forgiveness associated with that. So Torben, if you want to go ahead.
Absolutely. Thanks, everybody. And thanks, Matt, for kind of covering a lot of that stuff. And both as Matt and Michael and Rod had all already mentioned, there's a lot that goes into your next deal and your next transaction, what you can do to get your practice together. One thing that we are seeing in just the last 2 months, and so I'm going to speak kind of specific to what we're seeing, is people that actually receive these PPP loans, which are fantastic and it helps get you through kind of that hurdle. We're now running into the problem where a lot of these sellers are coming and they don't know how to calculate an unforgiven PPP loan that likely now, given changes that have happened in the last couple of weeks, especially extending some of the time frame, will become forgivable. But there are forgiveness aspects to that PPP loan that may make that forgiveness not happen until much later down the road and later at the end of the year. And so they're trying to balance, how do I not have a loan on my balance sheet that will be forgiven, but at the same time, how do I sell the practice before that happens? So that's one thing that we're talking to people about and reminding people that if you were able to get a PPP loan, and if you haven't and need one for operational purposes, there are still funds available. So we encourage you to go talk to your lender to get those. But you now have the opportunity to utilize a lot of those funds over the course of 24 weeks. So if you take it outside the aspect of valuation of your practice for the purposes of a sell, it's a very good way to get a lot of quick operating capital that in nearly every case now, there should be no reason why you are not able to get that forgiven. So if that's kind of your focus and what you're trying to do, that is a big aspect of what you're able to do now over 24 weeks. The problem, like I mentioned, is where you have this pot of money and you haven't been able to use it entirely, but now you can because you don't have to wait 8 weeks. You're now looking at 24, but you can't bring some of your employees back. So you're not going to get 100% forgiveness of that amount. And as Michael kind of said, and Rod touched on it a lot too, we have people that just decided to stay home. So you made an offer to them. Well, that counts as bringing somebody back for one of your FTEs under the forgiveness requirements under the PPP. So there are things to go about it, but the big, huge issue is people view the PPP, they hear forgiveness, they hear that it's going to be removed from their balance sheet, and they are not accounting for that in the LOI stage or even in the initial due diligence phase. And then when it pops up, when people are looking at the books and say, wait a minute, you have this unforgiven PPP loan, that's going to change the value of your practice one way or the other. And so what we're seeing a lot of right now is people are actually being a little more proactive, applying for that forgiveness as soon as they possibly can. And that will happen beginning this week, depending on your lender, if you are going under an 8-week period of forgiveness. A lot of lenders, though, are waiting. And so if you have a PPP loan, for example, Chase Bank is not going to allow anybody to apply for forgiveness until August 15th. This is the first time that you can do that if you received your money in April. So we have kind of this push and pull that's there. So you just need to make sure that's in your mind, account for it, talk with your buyer, talk with your representatives, how you're going to do that. And there is, under the SBA regulations, a way that you can, depending if you do it on as an asset purchase or a stock purchase, if it's a stock purchase, you can assign kind of those obligations to forgiveness to the new owners, and they will then be able to go get that forgiveness. So there may be some push and shove that can happen as it relates to value. But keep in mind the PPP, until it is forgiven, is a loan that needs to be appearing on your balance sheet, and in some cases may never be forgiven. And so that will impact how you're addressing it. And so think about that and make sure there are other loan programs that are out there, the EIDL that a lot of you may have received as well. Again, those are personal loans. That's a little more straightforward. So I don't think we're going to see those kind of difficulties as it comes to doing evaluation on that. But there are also several grants that are out and available. And I think Governor Polis just yesterday signed off on a couple additional grants that are available to all small businesses, including the dental industry. If you go get those grants are different. Remember, those are some that doesn't necessarily affect your valuation. But the PPP, if it's not forgiven, will. And just remember that. And so I bring that up only because that's what we're seeing the last couple of months on the 10 or 15 deals that I've done and been on. People are just either forgetting that those are there and need to hit the balance sheet, or intentionally saying, hey, they're going to be forgiven anyway, so what's the big deal? Well, the big deal is forgiveness is not automatic on these. You do have to request those. You have to ask for those. There are certain parameters on how to get those funds forgiven. And if you don't do that, that will carry a note against the business. It's not a personally guaranteed, but it will affect your business. So just make sure that you're accounting everything so that you can get the people that are helping you come up with a valuation for your business, that valuation is accurate, and that any of these issues that are hanging out there as we get past the LOI stage, past the due diligence stage, that we can address those and we can help you figure out how to navigate those. You do that, and then it's not a big deal. But that's one wrinkle now that has been put in because of COVID that otherwise isn't there when you have a mindset of that PPP program. And past that, there's a lot of other things that we can do to help you get through that. And you can start focusing on what comes next and how you can address those things. And utilizing the money that's available to you is a very good thing to get there. So circling all the way back, if you need the PPP funds for working capital, by all means, go and get it and make sure you do what you need to do for the best interest of your practice. And it may be forgiveness, it may not be, but whatever you decide to do, realize that there is money out there still today that's available to help you get what you need.
Thank you, Torb, and thank you, Matt. Again, huge information. I don't know how many times you have an attorney at your beck and call to be able to answer questions. So we've got two of them tonight. So any questions you feel you want to forward on, we'll try to get those back to Matt and Torben at the end of the call. So thank you both for being here tonight. All right, our next speaker is Kelly Jackson. Kelly's the Senior Vice President of Healthcare Lending with First Western Trust. He provides development of the infrastructure necessary to compete in the healthcare industry, support the Profit Center in their efforts to generate new opportunities and expand the existing relationships in the healthcare industry. So Kelly Jackson, welcome and thank you for taking time with us tonight.
Thanks. I had to unmute myself. I didn't want to start talking while I was muted. But thanks for having me, guys. And I kind of want to make this a little quick because I see we have some questions, and I know it's Thursday night. But let's get to our financing post-COVID. And there is financing still available. That's the main question. Is it available? And I say, yes, it is for these few situations right now. Currently, if you're looking for a practice acquisition loan, I understand a lot of the people may be sellers. So I just want to let you know there is capital available for buyers to purchase your practice. What we're doing now currently because of COVID is right now we've increased our carrybacks that we look back on that we're doing on the transactions. So that means we have seller notes, but we're ballooning them over at like a 5 or 10 year term. So that way it's not for the entirety of the loan, but I feel like my group, and then I've talked to people with other groups to where if a person is not a cash cow as your buyer, what we're doing now is we're doing some structure to make sure that that person has the seller to have a little meat in the game per se. And then the other reason we're doing it is because some of the practices have dropped and they haven't, and we don't know if they're going to come back as far as their revenues in 2019. And then we've seen some practices that have had exponential growth. So our concern is this growth just based upon COVID? And are they going to go back to the other dentist once their other dentist office reopens? So we've done some things to put some protections in there as for the bank to make sure that the transition works well, and there's always that good transaction of goodwill. Secondly, we talk about expansion money and remodels. On those things, we're still giving the 100% financing for those type of transactions when doctors are going to go into a new location, or they're looking to purchase real estate and then relocate that practice. The funny thing is that based upon the COVID world, we're seeing an influx of doctors who are saying, well, hey, I know I have this old space, but I want a larger space to make people feel more comfortable in my space because of COVID. So we're seeing that world happen too, to where we're doing those loans and helping doctors get to where they need to be. And then when we talk about debt refinance, that we look at that because we want people to understand that, hey, if there is another shutdown, we really want you to do an evaluation now of where you are and to understand that, hey, if there's another shutdown, there may not be the government may not be coming to bail you back out. So I think that if there is any debt currently in the practice, you have to make sure that it is set up in a way that is working and good. And then, like we said, just based upon, there is some startup stuff that's still happening, and that's happening. We talked about the layoffs, for example, where you're seeing some people laid off, and now doctors are saying, I'm going to control my own fate, and so that's the fine. So the full suite of products are still available to people if they want to use them, but because this is a super low default business, as Mike has mentioned earlier, is typically you'll see in this world 1% default. And most of your times you see the default is bad management in most cases, or someone buys something that doesn't make sense for them to buy, that they're really not committed to. But in most circumstances, when practices fall apart, it's user error, we'd say. And when we're looking at this post-COVID environment, I think that as long as you are out there and you're going to work hard, there's going to be financing available. And if you're a seller, and like everybody said, if you are working hard and you're doing what you need to do, there is going to be financing for you to get out of your business. In some cases, there still will be 100% financing out there, but it's still available to everybody. And I just wanted everybody to know that. Next slide, Kevin. And the one thing I want everybody to really think about is when they're looking at their financing is they've got to consider a few things. And I think there's 4 things that I think are super important. One thing is, do banks understand your needs? So I would suggest to you all to always find a subject matter specialist. So there are 4 or 5 special banks that really do this financing, and there's probably 10 other banks that'll say, oh, we can do it, and they don't really understand this world. So they may not know your equipment person or have a relationship with in the industry. So I would always say, if you can, stick with someone in this world, because the specialists they'll always know better. And they may cost you a little more, but I always feel like that's the best thing. And then the other thing is, will they structure debt in your best interest? That is 100% what I think is truly important, because they have to have a program that works for you. Because let's look at when Kevin and Rod sell a practice, there are other banks that get into this industry and they'll say, oh yeah, we'll finance that on a 5-year term, on a 7-year term. And let's be honest, that may not be the best thing for you and your family. So as I always say in this world is that this is super important, because your business pays for your lifestyle and you may need money to help run that lifestyle. So I think that you should always take it in the best way, because cheap money is not always the best money, is one thing that I will say. And then there's a new thing that I've learned since I've been with First Western is, does your bank work as a fiduciary? And that's a really big thing, because a fiduciary just means they have to do what's in your best interest. And when you sit down with your banker, that's a legitimate question I think you should really ask, because if they don't know the answer, that means they're probably not. Or if they tell you that they're not, then that means they're not doing what's in your best interest. They're doing what's in the bank's best interest. So I would say do your research. And when you're looking at these new projects, because the money is available, but I want you all to get it the right way from someone who understands it. And then I always say, is who I'm working with available? And and you say, so what does that mean? That simply means one thing. Can that bank help you out in the down times? And the perfect example is the PPP loan. Think how hard it was for a lot of people to get PPP loans because they chose to work with a bank because of it was one, they could do this loan for me, but they didn't ask about the other services that come with their loan, or that bank just didn't have services because it was a loan. And then when you come back to that bank for help and they're not available, that's probably not in your best interest. So my thing is that I emphasize to everyone is, can they help you in your time? Everybody can help you when things are good, but in your time of need, can they pick up the phone and say, hey, Mike, this is Kelly. Here's what's going on, and we need some help. And then Mike's general response is, yeah, we can help you. And that's who you want to have, a true relationship with those people who can help you. Next slide, Kevin. So I always talk about when you're choosing your banking relationship to do these things. At First Western, we use something that we call Connect View, but a lot of places a lot of banks are all willing to do this, and I need to make sure that you know these things and look out for these things, and look at people who will look at your legacy wealth, and making sure, because we don't live forever, and these practices are i.e. retirements or things that we're going to pass down. So we need to make sure that we're protected that way. We need to make sure our financial wealth is protected in the current, and then our recreational wealth is, we just have to make sure that we have the money currently to do all the stuff that we want to do. I know a lot of us aren't taking vacations now, but let's make sure we prepare ourselves to enjoy life, because we all know this isn't going to last forever. But hopefully when you structure your life and your debt and your financial plan in a way that you'll be able to move forward, because I want to go on vacation just like you all want to go on vacation. So I think that that's super important. Next slide, Kevin. Lastly, I would say is make sure when you're looking for banking partners in this new world that they're going to enhance your business and you're not enhancing their business. By that, I mean, make sure that they're able to help you as far as anything that you may need or have a resource, because I call it the utility belt. I was a comic book person growing up. So remember Batman's utility belt. He always had different solutions within that belt. So everybody that you work with in this world should have a solution or know a guy or get lady who can help you move further on and make your business better. So when you look at your banking partners, yes, they can give you working capital and merchant services and all those other things, but let's just make sure that they enhance your business as much as you're enhancing their business. And all right, got it done in 10 like my plan. That's next. So I see we have some questions out there, so let's go from there.
Thank you, Kelly. Thank you very much for sharing with us. And again, I think banking, if you have questions for Kelly, please upload those. I know we had some questions that were preloaded into the system. And I'm going to kind of ask first one that I see is non-competes enforceable. If non-competes is tied to a business sale, but not to associate or 1099 doctors, and is a solo practice. So do you want me to read that again, Matt or Torben?
No, I think we got it. And actually, it looks like in the chat function, there's a whole bunch of questions as well. And one of those was kind of alluding to that non-compete question. So in here in the chat, I'll read this out too, that the selling doctor has an associate doctor who's not interested in purchasing the practice, and the selling doctor didn't have a non-compete with this associate. Can the buying doctor require selling doctor to secure a non-compete from the associate? And in that case, is a non-compete in that case even enforceable? So if there's no non-compete there or signed already when the selling doctor is going, there is no non-compete to be able to discuss. At that point, if there's an associated doctor, it would be up to them to decide to actually sign that non-compete or not to. So with that said, I guess any buyer could specifically say, hey, I really like your associates. I want you to secure a non-compete with that associate before I buy the practice so that they don't quit and go somewhere else. Now, with that, that's going to be a little bit tricky, and where a practice broker will be able to come in, help out with the business terms of it, someone like Kevin, because even though I can come in there and I can put in the contract for the APA, the asset purchase agreement, it doesn't mean that the seller will agree to it. And at that point, it's just a matter of what the buyer is willing to do. Is the buyer willing to go into this practice and hope that the associate doesn't leave that practice and start next door their own practice and pull those patients? So it's a little bit of a tricky question. You won't be able to force the associate to be able to sign the non-compete, but you certainly could say, hey, if you want to continue to work here, we're going to require a non-compete going forward. And when they do that, it would also matter of how you actually structure the purchase of the practice. At that point, you want to be able to actually purchase the stock of the practice as opposed to just the assets of the practice, because the non-compete will stay with the practice at that point. If you're buying the stock, the non-compete is going to survive the sale. But if you are just buying the assets of the practice without the non-compete intact, well, then you're going to be facing a problem of that non-compete not existing anymore because it was with the previous practice. So without specifics, that's kind of the short or long answer, I suppose. Anything else to add on that, Torben, or did I touch on all the non-compete question there?
Yeah, no, I think you hit that. And remember, non-competes, especially in the context of a sale, very specific. In Colorado, the law is changing on a daily basis. And there was a couple cases that progressed through the district court last week that we were involved with that is limiting those even more so, especially when there is not an actual buyer or seller party involved. So your associate doctors, even as they're written today, they may not be as strong as they once were if they're beyond 1 year. And if, as you guys already know, that geographical region has become even more narrow, the courts are interpreting that. So always a good time to look at your non-competes that you have and get those in place before you start going to a sell is going to help you as you start dealing with everybody when you're working through an LOI, a term sheet, or even the definitive documents.
Okay. Thank you, guys. Let's go to the next one that I've got on my screen. Dr. Levine from the Levine Group podcast I listened to a few days ago, that it is his opinion, as I recall, that practices will have a stellar numbers for the first 2 to 4 months until the practice burns through all of the pent-up demand from patients coming back. It's his feeling that after that, most practices will see 60 to 70% of normal monthly collections for the next 12 to 18 months because of the unemployment, loss of insurance. What are your thoughts? This is to the panel.
I got something to say about that, Kevin, and everybody else. Please weigh in on this. But you know, I've heard that a couple times. Different people saying it. If I was seeing collections above above the average of where they were at, that would suggest to me that they're so busy because of the pent up demand. Maybe we would see, you know, an issue in the past, you know, in the future. But I'm seeing in my offices that just as many people are canceling their appointment because they're still nervous about COVID. You know, so I guess what I'm seeing is I'm seeing most of my clients at 100% or maybe 95% of what they used to be at. But if they were at 110%, then yeah, we're burning through that pent up demand. Does that make sense? So I guess I'm thinking about that. And like I said, that pent up demand is like, you guys lose me? My
No,
internet?
you're still there. You're now.
Okay.
You're on.
I got this big block saying your internet's terrible.
Yeah, you turned alien for a second there, but you're back now. So.
Yeah, okay. I'm just telling my clients to get that VIP list of all those cancellations during the last 2-3 months. And when someone cancels, and be very aggressive about your cancellation policy right now. You should be calling 2 or 3 days ahead of time. And if you do not hear from that patient, you go ahead and cancel that appointment. Take that hour under your control, call your VIP list and get it filled. And that's how my clients are getting to that 95, 100% of where they were at, because they're controlling their schedules. But again, most of my clients and practices that I've seen that even Omni is represented, they're not what they were. So that would suggest that they're going to be normal later on too. Does that make sense?
Yep.
Yeah, and I would agree with Michael as well. You know, I think a lot of people, and there might be a little bit more in Colorado specifically, as well as all the West Coast, but I've seen a lot of, at least the ones my clients that I've talked to, see that they're operating instead of 4 days, maybe they're operating 5 days. But again, it's just to be able to get those numbers, because they have to also spread it out a little bit more too. You can't see as many patients in one day as you were, just because of all the regulations. You know, you can't have people in the waiting rooms, you know, ideas like that. So they might be operating on a 5-day, which might be able to produce a little bit more revenue on that higher level. But again, I think there are those people out there. And so seeing a dip of the 60 to 70% of the normal monthly collections over the next 12 to 18 months, I think is too low. I don't think that'll happen. I think you'll have a lot more normalcy than we're thinking. Especially, you know, I know once the vaccine comes out, you know, hopefully at the end of the year, if not a little bit longer, you know, that will change some things and how people are feeling about it, because then they'll start going back in because they're going to have a little bit more security and how to be able to deal with it. So completely agree with Michael on that I don't think we're going to see that dip, and we might see some of the practices right now operating a little bit harder just to be able to deal with the different protocols that are in place, but also just with a lot of the people that do feel comfortable going back in. So we'll see how it goes. We don't have a crystal ball, but that would be kind of my assessment on it as well.
All right. The next question is, some podcasters are now recommending this is a good time to drop PPOs. What are your thoughts? Also, is the solo practice dying due to large group and DSOs? Is it possible to be a fee-for-service practice?
I'm happy to talk about this, but why doesn't everybody else jump in? Because I think I was watching the expressions of everybody. Matt, you were pretty passionate about it.
Yeah, and I think the biggest question with the solo practice dying due to large group and DSOs, I don't see that at all. I think they just operate differently. I think a lot of people still love solo practices. You get a completely different feel. I know I've been with a solo practice for the last 25 years, and I've been with him, and you get better service that way. And that's kind of what I see with the DSO. Yeah, you have some dentists that are going to be going, and their job is to turn people around to make revenue. You're still going to get those good dentists in a DSO as well that will have that personal effect, but it's not the same. And so therefore, I don't think the DSOs are going to kill out any solo practices. And I think it's a great time for people to go in and open up your own practice and do the startups right now because of the way that everything is currently. So if you can't buy because it is a seller's market, maybe it's an opportunity to go and start your own. So those are kind of my thoughts on it. I know that my face probably has too many tells on that. So.
All right. Anybody else?
Well, I'm interested to hear from the banker. Yeah.
This is this is the easiest way to put it. It's the dental world is going through what the veterinary world went through. Probably it started about 4 or 5 years ago, where venture capital people and groups started buying up practices for, instead of the normal 3 or 4 EBITDA, like 7 or 8 or 9 EBITDA. And so everybody started selling their practices to these corporate groups. And then what's happening now is a lot of these consolidators in the veterinary space are now out of business, because it's the same thing that happens is that you go to Walmart, if you're a Walmart shopper, for a reason, and you go to Macy's for a reason, or Neiman Marcus for a reason. So when you look at a lot of the consolidators, a lot of people don't like them because it turns into their, comfort dental experience, or it's a lower, or just not the experience that you're accustomed to or used to. Because I know my dentist personally, so I call him, I talk to him, I can ask him questions, he picks up the phone. And it's the same reason I was talking about before. When you choose your bank or any partner, they have to have your best interest in mind. And we know on the DSO level that if you're losing business to a DSO, I think that's something that you're doing. It's not that it's the DSO. It's because there's something in your brand or the quality of dentistry you're bringing that is why you're losing those people. I don't think a solo practitioner should ever lose to somebody who's a consolidator or a corporate, because you can provide a personal touch that they can never provide.
I'll add to that, Kelly. It comes down to that slide that I had about all the things that these private practice owners can control. I was asked to consult a 3-office DSO in California, and I went and observed that office, and it was a whole nother experience. You had people waiting in the waiting room like it was an airport. You had the phones ringing like going, and they're missing hundreds of calls a week. Their whole mantra was same-day dentistry. The hygienist was told to do every hygiene appointment in 20 minutes. I mean, come on. If you can't outcompete that experience as a private practice owner, I don't know what to say. I mean, at the end of the day, it's a personal touch. Absolutely, the private practice owner will win 10 out of 10 times. Banks, know that the default rates, they're still crazy low. So if the private
Right.
practice person was dying, then the banks would stop lending, and they're lending. And the one piece of that question that Kevin asked before is, I wish we had a little bit more color around that. If now's a time to drop the PPOs, I would say, heck no. If you're thinking about selling your practice in the next 5 years, do not drop those PPOs, because your new patients will fall, and that new buyer is going to want that insurance to be continuing to go. So no, now's not the time to drop those PPOs, but maybe there's a different question around that. So
Yeah, and I was going to drop in that as well, that it's going to affect your valuation significantly if you're essentially cutting out the ability to get more patients. And so you don't want to do that if you're looking to actually go and, get a valuation and actually sell. Maybe the idea behind it is, is it a good time if you're starting a practice to just do, fees for service or something like that? And I think that that's a possibility, but it's going to be based on demographics and, where are the people, what kind of insurance do they have, or are they going to want to just pay for the services cash? So I think there's, it's a more detailed question that you would have to hire a consultant or talk to a consultant to be able to get their opinion on it and see what's right for your practice. So
I know a good one too. Let me know.
All right. I'm going to go to a preloaded question that came in prior to the webinar. If retiring in the next 12 to 18 months, how do you position the practice for sale, for Rob?
The next 12 to 18 months, well, like we talked about before, you want to make sure you're keeping your production up. You want to look at your numbers and your ratios to make sure that you're not, your staff overhead isn't 50% of the practice and overhead, and you just don't have crazy numbers. So the first step is to probably contact Mike and have him take a look at your numbers, or call us and we can do a preliminary snapshot valuation at no charge to kind of see where your numbers currently are, give you some ideas of kind of the next steps over the next 12 to 18 months. We can work with Mike and do a quick write-up on what you should do and put a plan in place to get you there in the next 12 to 18 months.
Another preloaded question is, what do you recommend for associates trying to move into ownership?
Do it.
Do it.
What are you waiting for?
Yeah, typically, from what I've seen and read, it takes about 3 years for an associates to get their hand speed up. So that's kind of one of the critical things of moving into a practice, because I have had doctors buy practices directly out of school, and one guy bought $1 million practice right out of dental school, and he struggled for the first 2 years because he couldn't keep up. The older guys were doing crowns in 35, 45 minutes, and he was taking 2 hours. So the production was down. He struggled for 2 years before he took off. So that's one of the first things, to make sure your hand speed is fast enough to keep up the production. During the first few years out of school, you should also start educating yourself on practice management. Learn some of the business side of things. Meet with your brokers and CPAs and bankers and get your team assembled, get that ready to go. And just make sure you're in a position where in 3 years, and talk to Kelly about how much liquidity you should have in your bank account and your credit score and all those good things, and get pre-approved and ready to go with the practice, and get with your team, with these guys here, and just really be ready to go by your 3rd year.
Anything
I
on
would
that?
agree.
Anybody
I
else?
would agree with that. It's going to be about preparation on it.
100%.
Just getting ready for it all, but being prepared to understand that you're now going to be running a business, not just being a dentist at that point. So that comes with a lot of different things. So having the right team around you is going to be important. Also understanding what you're doing. If you're going out there and you're doing your own practice, you want to be able to understand, talk to your accountant, talk to your banker, talk to your consultants, talk to everyone that's going to help you be successful going forward, whether it's right out of school or 3 years down the road when you will be able to be more efficient. Those things are important. Just be prepared, and it does take some time to be able to figure those things out.
No, and I just like to add that if you're gonna do, like, here's the thing. I'll give you a true Kelly Jackson story. It took me 24 months to find the house I live in. So this is just for me to say, the practice that you want and desire is probably not gonna just pop up. So if you're saying I'm 12 to 6 to 20 months from doing it, that, to me, that doesn't make sense, because you have to grasp the opportunity, and I think you should always be looking. So in my experience, it's because I had some deal breakers for me when I was buying a house. So I said, well, I need this or I need that. And so to find those deal breakers, if you're saying I'm 18 months away, I bet you in that 18 months and 30 days, you're not going to find exactly what you want. So it might take you another year, it might take you another 18 months. So if you're not willing, if you're looking for a perfect situation, it's not there. So I think that if you think that you're going to go into ownership, look now. And if you find that thing that works for you, go get it.
Okay. I think we addressed this question, but I'll read it just to make sure we got everything out of it. The PPE loan could make a practice look more profitable than it really is. How is that calculated in the practice value? It's my understanding that the dentist must report to the unemployment department of their state if a job is offered to an employee and the employee refuses to come back. So that employee is to be reported immediately, so they are removed from the unemployment benefit roll. Is that correct? Is there any talk about the government waiving loan origination fees on SBA loans, which they can be pretty significant?
I don't think that. The great thing is I'm in the conventional world, and we do everything conventional. But I understand the SBA world. I don't think there'll be a waiving of fees anytime soon, because if someone is getting an SBA loan, my question is, why are you getting an SBA loan? Is a real serious consideration, because there are certain circumstances where I feel like the SBA is a great thing, but in a lot of circumstances, I don't think it's the right thing.
Yeah, I'll chime in and echo what Kelly just said. I mean, there's probably better options for you to go through there. I mean, just the pain and suffering that it will take to go through the SBA application process alone will direct you elsewhere. And if you can get through that, like Kelly said, there are some things that may make it worthwhile. But remember, the SBA, they partner with lenders and they kind of do that. They only make money off of those fees primarily. And especially with the loans that just came out, the EIDL and the PPP, those fees are kind of baked in there, and that's kind of what they need. So I do know that in the last round of discussions on the fourth stimulus package that they have been talking about the last couple of weeks, that was brought up and it was shot down from both sides of the aisle really, really quick. So to Kelly's point, I don't think those SBA fees are going to go anywhere. And then just kind of hitting some of these other questions, the PPP loan that makes a practice look more profitable. Well, it will be calculated as a loan because that's what it is until it's forgiven. And so that's kind of where the give and take comes on how you remove that aspect of it. And that's why it's very important if you have done everything you need to get it forgiven, but haven't got forgiveness yet, that's still a loan on the books that needs to be addressed, because until it is forgiven, you're going to carry that balance there. And then just on the unemployment stuff, That in Colorado, there has been a move that an employer that notifies unemployment department of the state that they made an offer to an employee, that employee didn't accept it. Under the way the law had been interpreted prior to COVID, that was an immediate termination of unemployment benefits. Remember, people who are unemployment are supposed to report every 2 weeks. That has been loosened and extended. Right now, employers are not required in Colorado and in the vast majority of states that we work in to actually make that formally. They don't need to. They leave it up to the employee to do their biweekly reporting and to be truthful with that. But for PPP forgiveness purposes, the Congress has added, if you do that and it's in writing, that will count as one of your PPP employees for your FTE to get forgiveness on that. So if that's where we're at, and this is purely kind of on the PPP purpose, trying to get forgiveness, and you can't get employees back, all you have to do is send them an email and say, hey, we want you to come back. They respond and say, no, I'm not going to. Well, that counts. You now have one FTE filled, and you don't need to find somebody else. You want to for business purposes, obviously, but to get forgiveness, you don't have to do that.
And real quick on the valuation question, which is related to the PPE loan, that would get backed out anyway because it's not a normal and customary income of the practice, so that would get backed out.
Well,
and
go
I was
ahead,
just
Kelly.
I was going to say, just to add to that, I know a lot of people took the EDIL just to, even I have friends who are dentists, and they took it just to have a cushion, just based upon the easy repayment. But all of them have said to me is, hey, in a year, since there's no prepayment penalty, I'll just give all that money back. So that's another thing. So if you need that loan to make your business survive, then that's another conversation to be having, is where I'm going.
And remember, that first 10,000, that first advance that you got, even if you don't end up getting that EIDL, that's a grant. That's not a loan and does not need to be repaid.
All right, gentlemen, thank you so much for your time tonight. It has been wonderful. Again, we appreciate from Omni, all of us at Omni, we appreciate everything that you've provided us with tonight. We will be sending out a follow-up email to everybody that was on the program, participated tonight, watching us. You'll get an email with a recording of the presentation so you can go back and look through it. We want to thank, again, all of our panelists for taking time out of your busy schedule. Rod, thank you and Omni for letting us have these webinars, and we'll continue to put these on in the future. So
Glad to do it. Thanks, Kevin.
for all of us at Omni, we want to thank you. And again, have a great day and a great weekend. And thanks for taking time with us. We look forward to having you on another call soon. Take care.
All right. Thanks, everyone. Yeah.